Hey, what's up, guys? Taylor Trader back again with another weekly review. Today's date is September 5th, and we're going over what happened this week in the market. My account value dropped like $1,600 over this past week. It's not losses, it's all unrealized, so that's what that is there. We're not on margin, so as you can see, I have 4K cash, so I'm not paying any interest. They took their interest because this week is the first of the month. So for 1 month, I paid like $13, $14, yeah, around 14 bucks. And without a broker, I was paying almost 180, 190. So you can see the difference. So that is there for the account status. So now we go into what I traded this week. This week was a insane week. There was money to be made that I didn't make, and at the same time, I took more risk than I should have because I was greedy, and I'm not gonna quote it up and say whatever. I was just greedy, and when you're greedy, you get caught with your hand in the cookie jar, and you get slapped, and you have to know when you're wrong and just take it off and eat that loss. All right, so first play I'm gonna go over is Tesla. So I want to show you something that you have to understand what is happening, and if you don't, you can get yourself in. You can take losses that you don't have to, right? So this Tesla trade was put on Monday. Tesla was at $460, and I sold the 380 put, right, requiring around 3,000 margin. If it falls all the way down to me, it's going to require 12,000 margin. So when I sold this put, I had $18,000 worth of margin available. So I looked at the trade on both sides. If it go against me, whatever, right? And I was receiving $188, and I bought it back for 180 after fees. I only made $6, and you're like, why did you take it off? Well, let me show you this whole thing here. When you're selling options, you have to understand IV. Tesla is a stock with a lot of IV, implied volatility. And I have this thing right here, right? So this thing is what I look at when I want to sell to see if, I'm selling at a good level or whatever. So when I sold this, Tesla was at 460. So I was like, yeah, 460 to that. And Tesla been running up, it's in an uptrend. This is an easy, $200. So I wanted 100 minimum or a buck 20. So I sold it right here. It dipped a little. So look at the IV right here, right? I sold it IVs at like almost 100. So up here I'm up like 90 bucks, right? And I'm like, yep, it's about time for me to take it off, right? Tesla is at 472. Tesla keeps going up, and my option is going against me the whole time it's going up. Look at this. The IV is increasing, increasing, increasing. So even though the stock is going up, the put value is increasing. So when I sold this, I was $80 away. Up here, I was down 40 bucks, and the stock is basically $120 away from me. You see what I'm saying? And it ended the day where I was down 20 bucks. And I'm like, this IV just literally ate me alive there. So Tesla put out, continue running, right, overnight. They put out an offering the next morning, and I just got out right at the bell and made $8. I said I'm not gonna hold this because if you're diluting shares, the stock is going down. 90% of the time the stock goes down whenever you dilute the shareholders. So I saw that I was green. I was like, I'm walking away from this, right? So I just walked away from Tesla today. But I wanted to show you guys that indicators, a lot of people bash indicators or whatever, but if you understand your indicators and what they're telling you, it's a lagging indicator. But I look at this thing and I saw the IV increasing. I sold it 100% and it's over 103, keeps shooting up. Even the puts are going to gain value. You know what I mean? So you have to understand what is going on so you can start looking for a way out. If, because this is not what I wanted. I wanted the stock to go up and I made money, but my plan was to get 100 to 120 and I was at 90 bucks and then it turned against me. So that's why I got out. This video is going to be a little bit longer because as you can see, I did 26 trades this week. Is it over trading? No, I liked all of them. There was two of them that I forced and I got my hand bit off of them. All right. These other Teslas was Friday. This was Friday. This was like literally at like 2 o'clock on Friday. Tesla was at 405, and I sold at 380 for $90, and I was up $50, so I take it off the table. And then I roll up to the 96, and I was up 50, but I wanted more. Then it started coming back down, cause I sold this when we were at 412, and we started coming back down. So I was just like, you know what, I'm gonna take my money and walk away. So I walked away with that. That was just Hennessy money on a Friday, right? So I can drink while I watch the Lakers lose. So mad right now, but woosah. All right, so that was Tesla right there. So Beyond Meat, as I said, I'm playing both sides of Beyond Meat because Beyond Meat is showing good support in the 120 range, so I can sell puts off the 120 range. That was basically what my plan was, to sell puts off the 120 range while I have the stock selling covered calls. So I pull up my daily chart and you can see this is 120. This line is 120, and we've been bouncing off. This line is 120, and we've been bouncing off 120, from all the way back here. You know what I mean? So, and this is back in January. So, and the pandemic hit, we went down and we came up, and we haven't really been below 120 for a while. So, I've been selling puts off 120 for last week and this week, right? So I'm just collecting food off both sides of the coin. So, I sold the right. I sold the 121 put. Let me take this. I don't know why I did that. I sold the two 121 puts for $230, and Monday morning we went up. So I bought them back for $33. Remember, I bought these back. If I kept these till later in the week, I would have actually been down on these. So again, I had my thoughts of, if this thing is at $150, I'm gonna take it off early, right? If it's at $150 with 1 day left, then I might leave it. But this is Monday, right? There's still 5 days to go. I'm taking it off. So I roll my strike up because, this is me, right? I roll my strike up to the 126. So I sold two 126 puts, paying $230. So as soon as I took this one off, I sold this one, right? And I bought them back. I bought them back because I felt Beyond Meat was gonna fall down, and I didn't want to be locked in. So I bought them back, $61 each, made $100 there, right? So those are two good trades. These were my covered call trades, so I hang on to these all the way until Wednesday. Yeah, I think until like Wednesday. I hang on to these all the way until Wednesday, and I bought them back for $40 each, netting $400 out of the 490, right? And that's what I wanted, so I waited late. Um, I didn't want to wait so too long, so I sold new covered calls for the other week, paying me, 500, basically 260 per contract. And as soon as I sold these things, Beyond Meat ran through the roof. Like, it was just waiting on me. It ran through the roof. I could have made, you know, $800, $900 that day off Beyond Meat. But it is what it is, right? So at the end of the day, Beyond Meat fell, and I was just like, you know what? I'm in the profit. I'm gonna buy it back and see if on Friday morning I can sell a covered call off it, right? So bought them back, made $23, right? So I'm waiting on Friday morning. Boom, Friday hits. Beyond Meat runs up. I sell a 2 week covered call for 550, 138 strike, and I also sold another one for 580, right? And then Friday, we had a big sell off, so I ended up buying these two back. I should have kept them a little more. I could have probably netted another $150 out of these if I hanged on to them for a little bit more. But I ended up making $480 off Beyond Meat there. My Beyond Meat shares are open right now, so if we get another pop, because Beyond Meat has good news, it's just the market been selling off for 2 days. So I'll leave my shares open. We'll see what happens there, right? But that's the play I'm playing. So if Beyond Meat comes up Tuesday or Wednesday, then I'll write some stuff. Peloton, this was a good play selling the 71 put, but I just have no patience, man. And Warren Buffett says it, that the marketplace is a place where you take money from the impatient and you give to the patient. So I wasn't patient. So even though I walked away with $40, I should have walked away with all this goddamn money, right? But it is what it is. I'm not upset. I'm just more of not sticking to the plan. And once you do something once, history tends to repeat itself, right? The same shit again. Roku's at 172. I sold the 155 put because it looked good on the chart, and I was like, this is pretty good, right? I sold one of them for 100 and something dollars. The next day, this thing is obliterated, so it would have been a 1 day hold. But the market started looking weak, Roku started looking weak, and I was just like, I'm just gonna take it off. Made $26, right? Fastly, right? You guys know I've been running with Fastly all of last week. So I had these Fastly puts at 84 strike. Market opens on Monday. I can buy these puts back, making $180. Then I decided to roll down like I always do, which isn't a bad idea, right? That was all part of the plan. Is if I buy these back, roll down, and I rolled down, one put because I said I just, this thing could fall on me, so I'm gonna put one put on. Yeah, I end up putting a second put on because greed, right? That's what I talk about at the front of the video. So I'm selling those put because Fazli fell with the market. So I'm selling those put. We talked about Tesla already. Penn, right? I had Penn on from last week, 3 contracts at $105 each. Monday morning, bought them back for $32. So I ended up getting the $200 on Monday. So I was happy. So I didn't roll down on these because the stock went up so far. I didn't want to roll up because I don't want to own it above 52. So I didn't roll up. I sold the next week 52 on a Monday for 110. Maybe I should have waited longer. Meh. Maybe I should have waited until the weekend. But when the market started falling, I said I'm just going to take this $40 loss and take this risk off the table because, the market was just crumbling on Thursday, Friday. And it was kind of a good thing because I would have to take it off for a bigger loss later. So that's what happened there. Chewy, this was a Chewy play. I saw it and it looked good. Chewy was at 66 and Chewy's a slow mover, right? And Chewy's at 66 and I could sell at 61.50s. I had 4 contracts put in at 50 cents. Most of my plays, I'm looking to make anywhere from $150 to $400. Depends on the type of play, right? If it's something like Beyond Meat where it's like I'm selling like 30, 20 bucks out, I'll put on 3 contracts, pay me 300 plus. But like small stocks like these, I'll only put on 3 to 4 contracts max. So I wanted 4 contracts of this, so I selected 4 contracts in my thing. But my default is 2 because I've set my default to 2 contracts because that's what I always want as default. So then I had to change to Beyond Meat, so the 4 changed to 2 once you change stocks. Then I came back to this, select the thing, select the strike, and it sold 2 instead of 4. So, I was a bit upset when I saw I had 2 contracts, not 4, because I was like, why am I not up more money? But, that's what it was. So I sold them in the middle of the day. By the end of the day, I was up $50 out of the 90 something dollars, and I just took it off. Because really I wanted $100, so I could just took it off at a decent price. So I just took it off. I said I'm not gonna hold that overnight. So I have these DraftKings that I had from last week, and Monday DraftKings got, Michael Jordan is on with DraftKings, and he's a big gambler, so he probably bringing his buddies. So DraftKings shot up to $40. So I closed it at the open. So from $90, 3 contracts, I closed them at $30 a piece, netting 177 out of the 280. I'm not gonna hold on to this any longer because a lot of people will sell the news, they won't buy the news, so the stock will actually go up and then it will come back down. So I'm just gonna take my profits there. Next we had is Etsy, and I caused this loss that I took on Etsy. Nobody did. I caused this. All right, so this is what happened here. So on Etsy, I had this one put come Monday. I had this one put paying me $100. Come Monday, it was trading at $35, so I buy it back, net me $70. My next Etsy put was the 116 for 152. This was one that I had to roll from last week, so I rolled it, and because Etsy went up, I got out. And look at this, I got out of this roll because I just didn't feel that great about Etsy, right? So that's why I got out of this roll. But no, what do? I get back in there, even though I said, I wanted to get out because I didn't like the drop it made last week, right? And I went back in there saying, oh, I can just go back in, sell these and it'll be all good. No, it's not. So, I sold these two puts for 90 cents and I had to buy them back for a 100% loss. So this is my actual loss that I'm willing to take. I'm willing to take a loss that is 100% of what I got, right? So if they're giving me $100, I'm willing to take $100 loss. But I'm selling premium, so even when you're selling premium, like you take losses that you want to take. But I didn't want to roll it because the market was looking crazy on Thursday, and I said I'm not gonna hold this overnight based on how big the market got down. Because I'm gonna take this because I can make this back, right? Losses that you guys see me take $1,000 loss and I'll make it back the next week because you know what I mean. It's just part of the game. It's just you have to protect your account, right? So if I take this $200 loss, I can be up $200 on Monday morning, right? And this is gone, right? So that's how I look at that. Everybody has a different mindset, but that's how I look at that. Win, right? So I had these two win puts on. Come Monday morning, these win puts are destroyed. Halfway. So I just said, you know what? I'm gonna take this 98, right? Because I'm lifting these things off the board. I'm not gonna keep them on the board. And this was a next week put, right? And this was an 81 put. I'm in the 82 put right now for $100 for the same September 11th. So I went back and sold these again on Friday. You see what I'm saying? So if I would have kept these all week, they would have actually increased in value and decreased. They wouldn't have gone any lower. So I took that off the table there, net at 90 something dollars. So that was pretty good. Boeing, this is one of the beat ups that I got. So these was my Boeing covered call. Bought it back and sold the next week one. I just won $100 from it. So I was trying to play both sides of Boeing, which wasn't a good idea. It's just my sizing was wrong. Because I was looking at my sizing saying, Boeing hasn't been below 158 since it's sold off on earnings, so we're good. Yes, that is correct. That it is a good play and it still is a good play, and I might go back in. But selling three contracts was where I was wrong, and I understood that I was wrong, and I was down. I was down like $400 on this because this play was paying me like seven, yeah, three 250, right? So this play was paying me 750, and I was down, $400 on it, and I said if it falls below $300, I'm gonna take it off and take the loss because I need to get this risk off the table because the market is rolling over on Friday, right? So I took it off. Rocket Company, this was another one I expected. This is Rocket Mortgages. I expected them to go up on earnings. They didn't went up. They sold off on earnings, and I was just like, I'm not gonna hold this stock because Wall Street is selling it. So I'm not interested in keeping this. So I just took it off. All right, so we go to our plays for next week. Win, as I said, this is 82 put. Sold two of them for $102 each. So I got those. I'm in pen now, so remember I had the 52s for next week and I took them off at a $40 loss. But now the market sold off and I can sell the 48s, right? So I sold the 48s, right? It's even a better strike than I had. So I like it, so I sold it, right? That's a good play to me. Apple, I decided to sell the puts on Apple and Apple got destroyed this week. I sold the 125 puts. Apple got destroyed this week. So I had, it was for next week, so I'm still sitting there. If I have to roll it, I have to roll it. It is what it is. It's a part of my risk tolerance. I just deal with it. Beyond, I am selling the 112 Beyonds. Remember about the 120s? Oh, I'm happy to sell in the 120s. Now I can sell 112. So Monday, if Beyond Meat opens where it's at, these puts are destroyed, right? So if it opens where it's at Monday, they're destroyed. If it goes up at all, they're just like Monday. If it opens where it's at, these puts are down 50%. If it goes up, these puts are even down higher. So I look at this. Actually, yeah, I didn't close this. You're right. I look at this and I'm like, easy one. This is easy 130, 140 out of this. I'll take this off the table on Monday and roll up my strike to like 120 if we go up on Monday, right? That's the way I'm looking at this. Uh, Fastly, as I told you, I sold the put, and then I end up selling another put, even though the first put went against me. that was just bad, right? That was just not playing to my rules of something goes against you, be cautious, don't sell more, right? Because guess what? The other one you sell, it will go against you even worse. So, I take that and I just sit here, right? Because we're premium sellers. We don't take losses. We lose time. We don't lose money unless we want to lose money. So I have my Boeing there paying me 250 for next week, and I have my Beyond Meat shares open. So if Beyond Meat pops up, I have 200 shares to sell covered calls on. So that's what that is. Uh, our total gain. So we already up 1900 on this month. I didn't show you guys, but yeah, overall for the year 24,000. We already up 19,000 for this month. You can see down here, made 1900 this week. I made 1200 off Beyond Meat this week, right? So my Beyond Meat um, cost basis is 117. I bought it at 141.79. I've made 4 grand off it in 2 months, basically, right? So that is pretty good. I'll take it. Boeing, as I said, we took that bite right here because I didn't control my size. So, that's my fault. And if I'm wrong, I'll say I'm wrong and I'll just take it off and we make money next week, right? As long as I have my account, I can keep making money. But if I risk my account, you know what I mean? I won't be making money. So I took it off there, took that loss, and keep on rolling. So this is what it is. You know, you have to understand, your risk and understand that, hey, I might be wrong here, and I can take this small loss and just walk away. My Fazley, I put this second, my Fazley, I put the second one on, you know, and that was just dumb. And I'm happy that it happened to me so I can learn from it, right? Don't do shit like that. That is stupid. There's a reason why I only put one contract on here because I liked it, but I didn't love it. You see what I'm saying? So that was dumb. It's kind of like the same thing with DraftKings here. I like it, but I don't love it. I like it in the 30. I love it in the 32 strike put, but I also like the 35 because I feel they're gonna go back up. It's just because everything is selling off. All right, I'm gonna stop rambling here because I'm a rambler. Um, and I have all my trades. If anybody ever asks, about my trades, I have all my trades in here. You can see everything that I do, right? So nothing is hidden. Everything is right here. You guys can look at them, make comments. All my little Tesla free monies that I made Friday. You can see these are 2 o'clock on Friday. I'm here playing the Tesla games. Um, that's it, guys. Thanks for watching. And, you have to understand how to control your account because I woke up on Friday morning and I'm down big in my account and I have to control my risks. All right, that's it. Let me know what you guys play, and you guys got comments on whatever I did. Just let me know. Just keep it respectful, and we go from there. Thanks again, guys.